Hello Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's 2 days before Christmas and the markets is sort of like, not sure what they want to do, but they're certainly going higher. But one stock I want to share with you today that I think it's going to do very well in 2016, and one that's good for you, is a stock called Whole Foods. Symbol is WFM, and I shop there every week. It's a great store. They have great products, very healthy, very organic type products, and you can see on the chart, if we look at this chart going back to the beginning of 2015, you can see Whole Foods hasn't had a particularly good run. You can see it sort of topped out here over the 56 area right here, and then it's just sort of just gone down, 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 and finally right around the November period started beginning to base out, like right there, and then we've had this move up. We've broken over the trend line, which is a good thing. We have got the first retracement there, 34.87. It's 34.93 right now. So it looks very, very good. I think we could look at this 50% retracement point quite easily, which is 38, which is still a nice move from here, over 10%. And I think eventually we could see Whole Foods trading back up to 56, which is practically doubling your money. So also very strong RSI. You can see it's broken over the trend, over the 50 line, which is a good sign, and it's very, very sustainable. But the big point I want to make here is, let me just show you, is our trade triangles, because our trade triangles basically are all positive. 34.50 was the original signal that came in yesterday. If you were looking at your trade triangles, which is right here, that would have shown you that came in. If you search today for trade triangles, go back 2 days, you'll see this signal came in on a monthly trade triangle, indicating that the trend has finally turned up. You see the last trade triangle we had here was all the way back here, and this is the new one right here. So you can see they don't happen that often, and when they do, you really need to pay attention to them. So here again, this is Whole Foods. This is the symbol and the stock, WFM. It's traded on the NASDAQ, and it looks as though it just made a turn. All of our trade triangles, as you can see right here, are all positive, and we think this stock can go quite a bit higher. Plus, it's good eating and good shopping at Whole Foods. Let's move on. This is a 3-month look at the Dow. You can see it really hasn't, we're up today, but it is so choppy. I think it's interesting to note the Dow closed at 17,823 last December 31st, and here we are just about 300 points lower than that for the year. So it's gone nowhere. It's gone everywhere but nowhere. The volatility has been quite dramatic for the year, but if you scope this out further year to date, you can see huge move over here, the big drop that came in late August. And we're sort of really squandering ourselves here. We're below the 50 line, which is not a good sign. Our intermediate term trend is negative, saying you should be on the sidelines, and I think that's a good place to be until the new year. Let's move on. This is the S&P 500 cash. We closed last year at 2,058, and we're 2,055 right now. Practically unchanged for the entire year, except for some of these big moves. Obviously the pivot point, the double bottom here, the pivot point, and the move up. But it's been pretty difficult to trade. You can see the dramatic drop we saw earlier in late August and the recovery. So it's been all over the board. Very choppy markets. We're below the 50 line. Trade triangle say you should be on the sidelines right here. 55 is a trading range. So I'd be careful. Keep your powder dry until 2016. Now, out of all the three indices, the NASDAQ is actually higher for the year. It closed last year. It's 4,739. You can see we're about quite a bit higher for the year. In that sense, you can see we started here and it's just sort of gone up, but not easily, for sure. We're below the 50 line. Trading range, intermediate term trend down. 55 trading range. I wouldn't do anything with this market until the new year. This is gold. You can see gold. This is the market vectors gold miners ETF. It's trying to build a base here just below the 50 line. We've got the weekly and the daily up, but really nothing going on the monthly yet. So that's going to be a very interesting one to watch, I think, in 2016. The key thing is here, so we see it go around below 213 and close below 213. It's not going to look good at all. But if it closes over 215, that's another story. Here's spot gold, pretty much the same picture there, except the weekly's still down there. The big key level there is 1,080. If it goes over there, we're $10 away right now. If it goes over there, that's going to be a good sign. If we see the 50 line broken, that's going to be a good sign. But generally speaking, we're watching for the 1,080 level right now on this market. This is GLD. This is the ETF GLD. We've just covered 3 gold stocks here. And you can see it's sort of just chumping around, not doing anything that's really that dramatic. You can see just sideways, sideways, sideways. You can just put this in really in a big box, just kind of like right there. That's kind of like where the market's been for the last month or so. So let's see how that plays out in 2016. But again, key level there is going to be 104, which we're quite a ways away from today. The euro closed at 120 last year, and here we are at 109. So the dollar actually picked up quite a bit of steam. But it's, again, we've seen the euro coming back. It's positive on the weekly and the daily. I'd want to be long the euro right now as opposed to being long the dollar against it. So again, we're over the 50 line. It's 60, sort of a trading range, but again, the intermediate term trend is still positive, which is good. Crude oil, this has been just a disaster. You can see we actually traded all the way down from $60 a barrel down to 34. No one's really seen any big benefits. We are seeing a little bit of a divergence here. And if we take, this is crude oil, it started out the year at $60 a barrel. We're now trading at 34. So it's come down quite a bit for the year. It hasn't seemed to benefit anybody that I can see, and it's still trying to find a base. So we're still looking for the 30 to 28 level on this market. All of our trade triangles are negative, indicating the trend is still very much on the downside. Well, that's it. That's the last broadcast, at least for this week. We may try to get one in on Monday to wrap up the year, but nonetheless, it's been a interesting year. We've had some big stocks that have done very well for us. We've had some markets that have done very well for us, including crude oil, which we were short for most of the year. And also, I think 2016 is going to offer some great opportunities. I think we could see a rotation, potentially out of stocks. We talked about this earlier in the month in our blog, and into something more precious like gold. So let's see how that plays out. I'm Adam Hewison. I wish you all a very Merry Christmas and a very Happy New Year. I'll see you next year.